Well, as you can see, the scenery behind me has changed a bit. Here in Las Vegas for, I don't know, 5 or 6 nights with the family. So I got a pretty nice view of the strip. You can see no recession here. I did read that they are laying off a lot of the casino dealers and such because the flow's not here in town as much as usual. But you wouldn't know it from the construction going on the strip. So I'll be doing some shows from here for the next few days. Appreciate you guys watching. Yes, the big, beautiful bill did finally pass today. I read that Trump is expected to sign it tomorrow. So, I haven't covered that yet. I'm going to, but when it was still in the contingency phase, if you will, I didn't want to waste anybody's time with that. I'm going to study it more, and I'll do a show kind of laying out what I think are, from my perspective, what are some of the pros, cons, for all of us, and I'll drill down a bit more on that. But today's show, I want to talk about the jobs numbers. So yesterday we got ADP jobs numbers, private payrolls. I did a show on that last night, and it missed like 5 times what economists thought it was going to be. It missed to the downside. It was the worst in like 2.5 years. So today we get the non-farm payrolls, the government numbers, right? And they blew out all expectations. I'll cover the story with you in a second. The point is this. Someone or something is not telling us the truth, right? You can't have private payrolls falling off a cliff and the non-farm payrolls, skyrocketing, or let's say beating expectations by that much. So something is amiss. Either ADP is trying to make the current administration look bad, or the government numbers are trying to fluff things to make them look better than they are. But it can't be both. So I'll let you guys make up, your determination on that. Love to get your thoughts and comments. But let me share with you the story today. I'll share with you the zero hedge take on it. Blowout June payrolls, it says, non-farm payrolls. And let me get back to my screen. Excuse me, I lost it. Blowout June payrolls, 147,000 jobs added, smashing expectations. Unemployment rate drops. Okay, they had expected the unemployment rate to tick up. It actually went in the other direction. And so look, is Powell going to give more weight to this jobs report or yesterday's? If the Fed gives more weight to the non-farms payroll report, which I believe it will, good luck with those rate cuts, guys, okay? Because this is actually on paper, it's a very good report, okay? It says after yesterday's shockingly bad ADP print of negative 33,000, the market was braced for the worst case scenario, with the whispered number for today's payrolls sliding to 96,000, the first sub 100,000 print, and far below the consensus of 106,000, and many even contemplating how to trade a stagflationary print. In the end, it turned out to be just another head fake by ADP, meaning yesterday's data I share with you, which now has the same credibility, it says, as University of Michigan report. It says, because moments ago, the BLS published a blowout job report. In June, the U.S. added 147,000 payrolls, blowing away the median estimate of 106,000 and higher than the upward revised May print of 144,000. So we got a revised, let's say, increase for May. Don't forget, if you watched yesterday's show, the ADP had a revision backwards, okay, for last month. So non-farm payrolls today is exactly the opposite. Totally different picture. There was just one economist who predicted a higher number among the 79 polled by Bloomberg, it says, who expected a higher print. So they got 147,000. Remarkably, and in a dramatic change from what we've experienced during the last administration, previous months were revised higher. April was revised up by 11,000 jobs from 147 to 158,000, and the change for May was up by 5,000 from 139 to 144,000. It wasn't just the headline print that says a surprise to the upside. Perhaps an even bigger surprise was the unemployment rate, which I just mentioned, which dropped from 4.2% to 4.1%, denying expectations of an increase to 4.3%, and far below the Fed's recently upward revised estimate of 4.5%. So the Fed themselves has been out saying, look, we're going to be looking at 4.5% unemployment. It actually dropped. Again, if you believe these numbers, again, as always, love to get your thoughts and your input and your comments. Among the major worker groups, unemployment rate talks about a breakdown. Drop in unemployment rate was the result of a 93,000 job increase in employed workers, offset by a decline in the civilian labor force to 173,380 from 175,10, and a drop in the number of unemployed workers from 7,237 to 71025. The labor force participation rate changed little at 62.3% in June, the lowest in 2 years, and the unemployment population ratio held at 59.7%. Don't ask me what that means, okay? I have no idea what those metrics are. I'm definitely not an economist. So we get a blowout non-farms payroll, and we get totally the opposite yesterday. So it is a bit of a head scratcher. I've been doing many shows lately saying, the jobs market is in trouble. The real estate market is in trouble. We know that this country is basically indebted up to its eyeballs at the government level, the state level, individual consumers. We know what's going on. I repeatedly say, guys have got to shore up your own situations. Please consider a side gig, a side hustle, or just becoming self-employed if you can by starting your own business. But I saw a story just a few minutes ago as I was coming into town from Fortune. And it was actually from yesterday, but I just saw it today. And I want to share it with you because a lot are out there saying, look, it's better just to skip college now and go and do a trade job. You're ahead of the pack. The traditional education, college route is not the way to go. It's too expensive. And I will be the first one to say it is resulting in far too much student loan debt for these young people that come out straddled with 6 figures of debt that they're never really going to have a chance of repaying, okay? Or it's going to take them decades to do so. So out of Fortune, interesting story. Again, something just food for thought. Says with AI, and the title is Gen Z is ditching college for more secure trade jobs, but building inspectors, electricians, and plumbers actually have the worst unemployment. So just again, don't leave me a bunch of hate comments. I'm sharing a story with you. I am not giving you my personal perspective. I'm not saying that those trades, are in any way less desirable than anything else. Here's the article. With AI coming for white-collar work, discussed that 2 days ago on the show about how AI is taking over. Microsoft laying off 9,100 workers now, additional workers. We have robots taking the place of Amazon, warehouse folks. So with AI coming for white-collar work, Gen Z have been ditching college and corner office ambitions, it says, in favor of taking up traditional trades like welding, plumbing, and carpentry. But they're in for a rude awakening, high unemployment rates, unhappiness, and automation risks. Trade jobs are having a moment, touted as smarter, safer alternative to irrelevant, in quotes, overpriced degrees and entry-level white-collar jobs, which it says tech CEOs are warning could soon be swallowed by AI. Traditional manual work is experiencing a resurgence among Gen Z. This is around 78% of Americans say they've noticed a spike in young people turning to jobs like carpentry, electrical work, and welding, according to a 2024 Harris poll for Intuit Credit Karma. They're not wrong. Trade school enrollment really has been surging post-pandemic. even outpacing university enrollment. And it makes sense. 6-figure salaries without student loans, the freedom to work for yourself, and hands-on real-world skills that can't be outsourced, it says, to a chatbot. But new research suggests that the reality isn't as stable or as future-proof as it's being pitched, according to this article from Fortune. According to a new Wallet Hub study ranking the best and worst entry-level U.S. jobs in 2025, trade roles dominate the bottom of the list. Welders, auto mechanics, boilermakers, and drafters all rank among the least promising career starters. Worst yet, jobs like building inspectors, electricians, and plumbers are tied to the highest unemployment rate in the entire study at 7.2%, more than 3 times that of entry-level office jobs like budget analysts, or financial analysts, which sit closer to 2%. It says the 10 worst entry-level jobs from 1 to 10. I'm going to read you the list. I'm not telling you I agree with this. Love to get your thoughts. Number 1, welder. 2, computer numeric control machine programmer. Number 3, mechanical drafter. 4, automotive mechanic. Number 5, boilermaker. Number 6, emergency dispatcher. Number 7, architectural drafter. Number 8, telecommunications technician. Number 9, benefits administrator. And number 10, tool and die maker. According to researchers, these roles scored poorly due to limited job availability and weak growth potential, as well as their potentially hazardous nature. So we have some that are saying, look, you got to ditch college and get a head start. Some are obviously, like this study, are saying that maybe that's overrated. It says new technologies like prefabrication. Hold on a second, guys. I'm losing my okay, I'm done. I think Fortune shut me down on my article. But that's what I wanted to share with you is there's always 2 sides to the analysis. And some people would say, look, you got to go to college. As you guys know, I'm a college graduate. I'm a post-college graduate school. I have a law degree, Juris Doctor, JD. So I went through a lot of school. But I also had loans. It took me years to pay off those loans. We know what's happening with the student loan default rate in this country. It's off the charts. We know what's happening to many of these students that enter the workforce and they're not making enough money from their job to pay their loans. They're going into default and their credit scores are getting hit. Okay, so I did a video on that about a week ago. Go check it out. Basically, they have very little chance of success when that ball starts rolling downhill in the wrong direction. So going a little bit long today. I will be checking in over the next few days from here in Las Vegas. I will do a show on the Big Beautiful Bill and break down from my perspective what I think are some of the positives and some of the negatives and some of the takeaways from this new legislation. And let's see, markets rallied today. It was a partial day in the market, but the stock market loved it. And very interesting because I think this job report today signals that the Fed is going to continue to delay cutting rates. But the markets took it as positive news. I see cryptocurrency, Bitcoin's back up again, 110,000. Gold sold off a bit. Silver is having some nice gains, back up close to $37 an ounce. So look at these other asset classes. All right, with that being said, I will talk to all of you soon. I appreciate you guys watching the show, liking, and subscribing if you're not subscribed. Oh, and by the way, I'll put my link below. If you want to start your own business, do it the right way, incorporate or use an LLC in whatever state you're in, you got to contact my friends at Corporate Direct. They do a flat fee setup with ongoing maintenance. And like I said, their flat fees beat anything I could compete with, at least in California, to set these things up. Do it the right way. Don't commingle your personal assets and your personal things with your business, okay? Lots of reasons to take precaution there and do it the right way. But starting your own business, being self-employed, controlling your own destiny it's the way to go. So thanks for watching, and I will talk to all you guys soon. Bye.